as well. So, ladies and gentlemen, please put your hands together for this another live demo on inward remittances by Dr. Satash and Mohsin.
All right, I think I'll just turn back the conversation to where we started yesterday. So the remittance and the stablecoin use case on how we can utilize that to improve our remittance, how we add up in the efficiency as well within our own product. So we'll just go with the real-time practical use cases on how the other markets, which are actually the regulated markets, UAE, for example, then the US as well. We'll just take the example of these markets and how these countries are utilizing their regulated infrastructure to improve the remittance within their countries. Before going to that, we'll just get an oversight of why is it important for Pakistan, why we say that we need to reduce the friction for remittance in Pakistan. So let's just go through the numbers. Pakistan is doing a record $38.3 billion remittance, and that's increasing each financial year. So this year, I think it's expected more than $40 billion. But for the financial year 2025, we did at $38.3 billion. For getting that remittance within Pakistan, we are paying an average of 6% for that $38 billion. And that 6% is on the lower side, based on the conversation that was there yesterday as well from different stakeholders and the people who are there in the market as well. That's even on the higher side. So it could even go up to the 7, 8, 3 to 8%. It could go on the lower side or it could go on the higher side as well. So I'll just keep an average of 6% for that. The fee for that is around about $2 billion. For a country like Pakistan, that's a huge chunk of their remittance which is going into the fee. You take the example of someone who is sending money from US, a lot of that money goes into the SWIFT fee and all of these FX exchange that happens between that. So we really need to see what and how we can improve that whole infrastructure by using the new stablecoin settlements and the use case for that as well. So we use Swift. It takes a couple of days for the money to land into your account. So it could take up to 1 to 3 or more than business days as well. And then there is a lot of FX friction in between all of these processes as well. So if you send money, if someone is sending money from Australia or New Zealand, there's a lot of currency exchanges that is happening in that. So anything that goes into the PKR, it's first get converted into USD, and from USD, then it gets converted into PKR, and then it lands into your bank account. So we'll see a monthly breakdown of where we are getting the most remittance from. So Saudi Arabia is one of our biggest countries. So we get like 25% of that from Saudi Arabia alone. Then we have the UAE, so 21% for that. And cumulatively, both of these countries do 46% of our cumulative remittance. And that's a huge chunk of money that the Pakistan is getting. So we have then the UK, which is standing at 14%, and then the EU as well, which is standing at 12%. Surprisingly, US is standing at 10%, which is quite on the lower end based on the market size and the economy as well. So we can really see if there is an opportunity for us to actually improve the inflows from US using the crypto and the remittance around that as well, because the crypto regulations in the US and then the other regulated countries, maybe we can utilize that to improve our remittance flow from these countries which are standing on the lower side. So for example, the 10% we are seeing here right now, we can maybe improve that. Let's just explore that. So the business case is that we have Zephyr. You might have heard of it as well. He's one of the Cedar great person. He has went to US for his master studies or something similar, and then he has published a paper as well. The conference is going to happen in UAE, and now he needs to send money to someone in UAE very instantly. So the use case and the business case is that Safa needs to send $100 to someone in UAE, and Aftab needs that money instantly there in their account. So he can't wait for 3 days. The conference is going to happen within like 1 day, and he needs to travel. He needs to make sure that everything is fine. How is that going to happen? So Safa would like to do it fast and cheap. The traditional banking channels will work, but are they fast? And are they cheap? That's the question. So let's try the crypto back channels and see if it's actually working or not. Is it all in the air that we are talking about? That there is a lot of financial revolution is happening with the stable coins. We have I think discussed this keyword a couple of times from the yesterday as well. The stablecoin based remittance. What does it actually mean? How does it look like? Um, is it all in the air, or is actually there some company who is deploying that as well in the real time? So let's just look into that. It's just one use case. So Huzafa is sitting in US. He has an account in Coinbase. Coinbase, before making an account on Coinbase, he has to complete his KYC. So he has to provide his all the information. So the national identity and all the KYC information that you provide in any banking channel as well. So he has to complete that to comply with the regulator and all the regulations that come with that country. And then Aftab has an account within Fasset as well. So Fasset is also a regulated VASP in UAE. He has to comply with all the KYC information in that jurisdiction as well. Now, what Zafar he tops up his Coinbase account using his credit card by sitting at his home for $100. So he will top up the Coinbase account using his credit card for $100, and then he will convert that 100 USD to 100 USDT within the same application. So he doesn't need to do anything more than that. He just integrates the debit card that he has attached with his banking account, and then he converts that into his USDT, which is a stable coin. All of us are familiar with that. The USD to USDT conversion is actually happening through multiple liquidity providers. So the VASP, which is the Coinbase, the exchange that we are talking about here, has multiple local liquidity providers which help you to convert USD to USDT. And now one thing to note here is that the local liquidity providers in that case are also regulated by the regulator. So it's not something which is like, so any entity that comes in the whole play is actually regulated by a regulator, and is on their side. Now Huzafa adds the wallet address of Aftab at Facet. So what Aftab has done is he just gets his wallet address from Facet. He pastes that address over the WhatsApp and just send it to Huzafa in just a couple of seconds. Huzafa adds the wallet address at Facet. So now the withdrawal process has started. So once he clicks and submits on the withdraw, the movement of fund has started from Coinbase to Facet. But let's just take a stop here because both of these are regulated exchanges. And both of these need to comply with the travel rule and the FATF regulation as well. So what will really happen is here, so Coinbase will check the information of the wallet address that the Aftab has provided, and then we'll also check against the travel rule as well. So for example, the limit that we have there is for UAE, you can get a maximum of 3,500 dirham without any travel rule implication. So below an amount which is below than that, you can go away, but an amount more than that, you just need to comply with the travel rule information, which implies you need to give every information till the last sender. So you need to provide their details and all of these things as well. So there is a travel rule framework that is happening between both of these exchanges. So and then there is a compliance check as well, which is going on with on the Coinbase side as of now, because the funds have started moving from Coinbase to Facet. And then as the funds move to Facet side through a blockchain network, within a couple of seconds, the funds have landed into the Facet network. But has Aftab received the funds? Not yet. Why is that the case? Because Facet is also a regulated exchange and they need to comply with the travel rule information and all the compliance checks as well, which come between all of that process. So Facet will start a compliance check and will see that the sender, which is Huzafa, is he's a nice guy, is the wallet address where he is sending money from, is that involved in any malicious activity or not, or is that a green mark? So he just completes the compliance check. Once that is completed, the USDT will be received and will be given to Aftab. Now, Aftab has the opportunity to hold those USDT within his Facet account, or he can just convert those USDT into dirham by using the same application. So, Aftab needs the cash. He needs to convert that into dirham. So he'll just go into his app, sell the USDT against dirham, against the exchange rate that he's getting, based on that, he'll get 367 dirham within the Facet application. And how all of that process is actually going through? There are multiple local liquidity providers in that case as well. So you have to move funds from USDT to dirham, and there are multiple liquidity providers that come into play for that. A couple of these are mentioned there as well. And that's how the funds have moved from Huzafa, who is sitting in US within a regulated framework, to someone who is sitting in UAE within a regulated framework. And all of that has happened within just a couple of minutes. Now, Aftab can just withdraw his funds using an open banking framework from the Facet application to his Mashreq, Emirates MBD, or whatever UAE bank account he has. And all of that has happened with not only within a few minutes, but with the utmost efficiency as well. So you see the USDT here, he's getting 99.9 USDT. So see and compare it with the Swift and the wire transfer that you get from the other side. A lot of fee goes into that, and that takes a couple of days as well for you to land into your account. So here we have a actual real demo as well. We'll just quickly go through that. So Huzefa and Aftab both are the young people. They are tech savvy. They know what's crypto, what's the exchange. They can make their account on the application. Uh, they have the application in their mobile as well. So let's see how to do that.
Tab. Hey, Huzaifa, can you please send me 300 dirham or $100 quick? Zephyr? Yeah, sure. Can you please share your USDT ETH wallet address or the QR code? Definitely. You can send to the attached wallet address.
So now Huzefa has gotten the wallet address from Aftab. So what he will do is he will copy this wallet address, open his Binance application, and from that he will start the withdrawal process or the sending process of USDT to the Aftab's wallet address. So he will click on send, withdraw crypto, and from there he will click on USDT. He will paste the wallet address which Aftab has sent Husafa on the WhatsApp. So he will click on paste. On the network, both of them decided to do it on Ethereum networks. They will click on Ethereum. And then the amount which Huzafa needs to send to Aftab is 100 USDT. So he'll click on 100. And then you can see here the receiving amount which Aftab will get in UAE would be 99.40 USDT. And the network fee for this transaction is 60 cents. So he'll click on withdraw and then slide to confirm. So the withdrawal has been processed. Okay, so now we know that Huzefa has sent 100 USDT from his Binance application to Aftab's crypto wallet address. So now Aftab is going to check his crypto balance in the Facet application. He will navigate to the crypto part where the USDT balance plays in. Okay, so now Aftab has got 99.41526 USDT, which Huzafa sent from his Binance account sitting in USA. Now Aftab here has the opportunity to sell his USDT against dirham, or he can keep his USDT as long as he want to. So he can just see he has the 99.4 USDT. He can sell those USDT, get the cash in return. So he will get 363 dirham in return for 100 USDT. So he'll just click on that and just confirm this transaction. All right. So now Aftab has 363 dirhams in more in his account. What he will do is he needs to just withdraw And to withdraw, he'll do a wire transfer. So his cash wallet has 363 dirham in his account. To a bank account. So he has multiple bank accounts listed here. Standard Chartered, Mashreq. He can link a new one as well, but he will go to Standard Chartered UAE. And now the 363 dirham, which Huzefa sent from USA from his Binance account in the form of USDT, now Aftab is cashing out those dirhams into his Standard Chartered bank account. And all of that is happening within the regulated framework of both exchanges. So the Binance, which is regulated in US, and the Fasset application, which is regulated under WARA in UAE, all of that. So you see how the money movement has happened from US, a regulated country, to someone who is sitting in UAE. So WARA regulates all the crypto exchanges, and how the faster the movement has happened within all of that framework as well. I know a lot of you have questions. I can see a lot of handles as well. I'll just complete my demo. There is one more very interesting case on that. So we can take the questions later on as well. So the movement of money has happened for two people within just a couple of minutes. Let's just take a step back. So these two people are the young guys. They know what's crypto, what's the exchange is, how to move funds from crypto, wallet addresses, networks, and all of these things as well. But let's just think about our parents. They're not familiar with the crypto. They do not really know what crypto is, what the network is, how do they copy and paste, and all of these things as well. So, what's the use case for these people? How they can utilize that within their own framework as well. So that's a real use case for Pakistan too. We haven't got it the case for Pakistan because the regulations are currently not in place. Once we have more clarity on that part, I think it will be a good exploration on there as well. So what's the future role of banks that come in that part? So you have seen the money movement between two apps, but where the bank comes in. So the bank is actually, so Zafar used a debit card. The debit card is attached to a bank, and then Aftab withdraw his funds into a UAE bank account. So it's only on the node, so on the ending node side. But is there actually more meaningful collaboration and the role that the banks can actually take in that whole process as well? Definitely, it could be because if we are saying it that the financial infrastructure is changing, then the banks would fit into that as well. So in the world where we have multiple exchanges, so the vast crypto exchanges, brokerages, liquidity providers, stablecoin providers as well, where would banks fit in? So currently, when we do the SWIFT and the other wire transfer as well, there are multiple correspondent banks which move your funds from one jurisdiction, one country to the other country. Multiple banks which come into play. So JP Morgan, Cities, and all of these as well. In a crypto remittance world, currently they are bypassed. So you see money movement from a crypto exchange to another crypto exchange. Both of these are regulated, but the banks are bypassed in the whole process. They are just on the ending node. So unless they become an active off-ramp node in the new flow, and what does it mean? That user doesn't really need to make a new account on the crypto app. So you get to receive your crypto funds within your um, mobile banking app. So I'll not name the Pakistani bank. So for example, you say Emirates MBD, you just open the app and you see a button for receive. You just click on that. You don't know crypto. You don't know anything about that as well. It should be that user friendly. It should be that easier for the user to get their funds into their bank account. So this is the part where banks will actually come into the play. So previously we saw a consumer to consumer flow. So that was a B2C flow. Now we see a more of a B2B2C. So for example, um, the banks, the exchanges, and then the users. So we'll take the example of Mrs. Bushra. Mrs. Bushra is a very hardworking woman who is sitting in UAE, and he needs fund in his Mashik bank account because he needs to buy some groceries or do some stuff for that as well. So instead of opening account at a crypto exchange, he wants that to be happen within their mobile banking app. But he isn't very familiar with all of these terminologies and all of these things as well. So banks develop a relationship with the VASP, so the crypto exchanges. Once they get regulated, banks will start developing a relationship with the exchanges. So the banks will keep the customer in that play. The customer is coming to bank, and then bank, based on their B2B relationship with the VASP, they will handle the movement of funds there as well. So the VASP is not actually going into direct contact with the customer. The banks get to keep the customer, the user experience, the fiat funds as well. But the VASP do the crypto work and all the compliance, the scrutiny for that as well, the FATF regulations and all of these things too. Let's just quickly go through that too. That's a B2B to C flow. So you see there is a bank, then there is a crypto exchange, and then there is the user. So B2B to C flow. So integrating crypto in banks, we have Mrs. Bushra, who is not crypto savvy. He opens his banking app, Emirates MBD, for example, it's just for the example, and then he sees a Fasset widget within their banking app. So it's just a button where if they click on that and they agree with the terms and conditions, the KYC information which Mrs. Bushra has with the Emirates MBD, it's shared with the Facet, and both of these are regulated entities within the UAE. So they can share that information between each other. And user doesn't need to create new accounts. It's just the one same account which is doing all of these things as well. So shared KYC eliminates the onboarding hurdle. Mrs. Bushra sees a QR code and a button for sharing that on the WhatsApp as well. So she'll just click on that, share the QR code with his son who is sitting in US, and that's it for her. She has completed her part, and she just needs more dirham in her account, so she could buy more groceries for that as well. So what will happen is the QR code that he shared with his son, her son will actually deposit USDT over that crypto wallet address. So Mrs. Bushra doesn't know crypto. Mrs. Bushra doesn't need to know crypto as well, but her son does. So he'll send the USDT on that wallet address. That USDT now has fallen into the VASP custody. So bank is actually not touching the crypto, not doing the custody as well. Both of these are staying in their own boundaries. It's just that there is one link between them, which is the exchange of fiat. So Facet will get the USDT, convert the USDT into dirham for Emirates NBD, and then Mrs. Bushra will receive um, his Emirates MBD account topped up in real time. But Mrs. Bushra doesn't know what happens in the backend. There has been a crypto transfer that has happened from US to UAE, all that within the regulated framework. Both of these are regulated entities, UAE, Facet, Emirates MBD, Facet. Facet does the compliance check, Emirates MBD does the compliance check as well. All of that has happened within the regulated framework. So let's see for as an example. So this is the interface this is just a placeholder, by the way. And she goes into his mobile banking app, open the app, she sees a button here. So this button, she clicks on that. There is a terms and conditions that come in, and these terms and conditions are really important because you are giving consent to Emirates MBD that you can share my information with the third party, which is the Facet and the regulated third party as well. So she will just accept the terms and conditions. She'll get a QR code screen, which she can share using the WhatsApp as well. And once her son does a deposit on that crypto wallet address, she will get AED topped up in her Emirates MBD bank account without doing anything in real time. It's as simple as that. And it should be as simple as that for the people who are going to use the remittance. If we are saying that there is a 6% fee which is incurred on $38.3 billion. It's actually the people who are getting $1,000 from US, and they need to pay 30, 40, $50 of that into the fee. If that fee is reduced under $1, $2, that's a big chunk of money that these people are getting in their account. And that's it. I think a lot of effort has gone from the Dr. Zatash, Dr. Basit, Huzefa, the great guy behind Cedar. My name is Mohsin. I'm a LUMS alumni and I work at Fasset as well.
Huzefa, the great guy behind Cedar. I will get back to you on this. Anyways, uh, are we taking questions? Yes.
My understanding is that the 40 odd billion dollars that come in remittance, State Bank actually pays over $1.5 billion in commissions and blah blah blah.
Mhm.
So are they stupid? Why aren't they talking to? What's wrong with them?
So I think, no, 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 so. So there are two things. One is the conventional banking infrastructure, which is already going there, and how it's operating. I think we had this conversation yesterday as well. We don't really, I think these people as well don't really want to disrupt the current system, which is moving on. So you just can't rewire the whole system. It's just a step by step process which you take to move and ease the movement of funds outside of the country. And let's just take a moment here as well. I think one key role for that is actually for the regulations to take place in the country. A clarity on that, both from the crypto and the state bank side, is really important for the entities who are operating under these regulators. So, for example, the crypto exchanges, which are going to work under the regulator, they need to know their jurisdiction on at what level they can work on, how they can facilitate the banks as well. And there are multiple sets of the licenses that the crypto exchanges get. There is just one part of it which we have just seen. So the movement of funds from one banking crypto app to another crypto app, but that crypto exchange or the company itself holds a portfolio of licenses to make sure that they have the license for custody so they can hold funds. They have the license for retail exchange as well. And then they have the license for the movement of funds as well. So just going back to your question, why the state bank is not doing that or the other countries, they're just rewiring their whole system step by step. And the first step for that is actually for the clarity, crisp clarity on the regulator side on at what level the jurisdictions and at what boundaries different institutions can actually work on.
Let me just answer or just add to this comment. So again, if you see the use case, that was UAE, and that's actually what happens there. Uh, it was not in thin air or it was not a fictitious use case. This is exactly what happens there and how you would receive uh, remittances or any payment in your bank account via the crypto channel. And Mohsen, again, he's an employee there, so he works at Facet and he does this every day. We are not sure what are the equivalent entities in the Pakistan ecosystem. And again, that is you to decide where would the liquidity provider fit in, what kind of regulations, what kind of licenses you need, what are the similarities between these use cases and the remittances we receive, and what are the differences. So again, that's a dialogue that need to happen here. And if we can successfully agree on something, then from a technology standpoint, it's very easy to implement. But again, is this use case, can that use case be replicated here? That's you to answer.
One more thing, I think I couldn't give the disclaimer in the start, but the whole playbook was actually from the UAE.
Okay,
And the reason for that is just to segregate the unregulated and the regulated markets for us to understand it in a better way on how that is working.
I just okay. So can we have question from Mr. Faraz? Can we give mic? Please give mic to him.
Just adding on to this, I think the major chunk of that fee that we were talking about, 5 or 6%, that goes into the money conversion, the exchange rates that the banks apply. So
So
no,
we have the banking.
I think one or okay, 2 or 3% is the exchange rate.
No, so exchange rate. Okay, okay. Let's just. So there is
Okay,
multiple correspondent banks. So
okay.
money
So
moved from one bank to another
yes,
to
there are
another.
intermediary banks involved as
Exactly.
well.
So they
Yes.
take a chunk of that between the whole that
I
process.
think this is the question for lunch. Can we
Okay. So
take another
was
question?
just a
We're
comment
just
that
gonna go on a
what
lunch
will
break soon
make
after that, and
what
then
will make the people not charge those exorbitant exchange rates from conversion from those virtual assets to.
okay. Yes, sir in brown coat. Yes, sir. Please ask your question.
Assalamu alaikum. My name is Arshid Mughal. Uh, by the way, I am the one who has implemented RAST in Pakistan.
That's great.
So I would propose that instead of proposing every bank to integrate, you should propose RAST as a rail
Hmm.
for connecting any WASP to RAST. So in that way, you would also engage State Bank. So that's a very good use case for the State Bank of Pakistan, and that somehow they can facilitate, and you don't need to do integrations independently for all the banks. You just connect with one rail, and then you can connect to all the other banks.
That's a good point. I think I was having a similar sort of discussion with Zan as well, who was from Piwara yesterday. Um, Honestly, at this point, there needs to be some clarity that needs to become on the jurisdictional plus the regulatory point of view as well. Um, because the VASP holds multiple licenses, but to integrate the a party like RAS, that's a separate partnership and the conversation that is happening. That's a separate entity. Banking is a separate entity, so these are regulated by State Bank and all of these things as well. It's actually a network. Yeah, they are replacing that. Yeah. It's a subsidiary of that, but to have the partnership between two things as well. The RAS integrated within VAST, I get your point that people can really transfer money from using their RAST account instantly into a VAST without using a bank or any other application as well. So it just increases the user experience. It's on the banks and the banking people here as well on how they want to improve that user experience and keep that adding on for the user as well. But the actual core essence of this whole idea is just to reduce the fee, make it more efficient, make it more transparent as well, and a little fast for the users.
That's great, ma'am. Can we have your question?
So I just wanted to add something. While obviously UAE and other countries are more advanced and they're using crypto and everything, but the Pakistani remittance market is also has also progressed a lot in the past few years. And now, like if you're talking about the Swift channel, it's different. But home remittances, and we're working with a lot of fintechs and other companies and exchange houses. So transactions now reach Pakistani accounts instantly also. So yeah, and as far as cost is concerned, it's mostly borne by the banks.
Agree with you. So, for example, the movement of funds, if I have the USD in my Wise account, it just happens mostly instantly for the money to land into my Mizan Bank. But let's just go a step back. The money that actually lands into Wise, that has been deducted. So I get a $10, $15, $20 less amount than I need to get. Because all of these banking rails, which have been happened in the conventional banking, they're taking a lot of chunk for that.
And we need to take one question from this side,
Yes.
and just last two questions. One from the back and one from here. आप इनको देते पहले.
Moving to on-chain. So we need to change the whole scenario.
It will really help in the settlements and making the system more efficient as well. And you can see that it removes the intermediaries. So if you remove the intermediaries, it just increases your efficiency. It makes the system more transparent as well. And as you And the movement of funds is also very simpler in that case. Exactly. So the on-chain will help in that.
Great. Yes.
I just wanted to add one comment that about removing the misconception that probably funds are not instantly transferred within the banking channel. That's not anymore the case. And secondly, 6.36% fee which you referred is, I guess, overstated. Is almost negligible. And actually, I would like to refer to one point or one use case that you can, using the International Payment Scheme card, you can transfer card to card payments instantly and without any additional charge.
I
Thank
get
you.
you.
Okay.
So
Just
just on that,
the question.
the instant part, I really get that. The movement of funds when I have the USD sitting in Pakistan to my banking account is fast. It could be instant. It could be within seconds. I just do a withdrawal on Wise. It can land into my Mizan bank instantly. But the movement of funds into Wise actually, that needs to be studied as well. So the USD or the AUD, which is moving from Australia or maybe from United States as well, that needs to become efficient as well. The fee which is incurred in all of that process needs to be more efficient. It needs to be fast and just give me the money which I own um, to to my client, for example, without getting a big chunk of, spending a big chunk of that in the fee. So just on that as well.
That's great. If Durrani, you can ask your question during lunch. Good. Okay, great, guys. We have now lunch break. Thank you, Mohsin. Can we give a round of applause to Mohsin? That was amazing. And to Dr. Satash, of course.